Good evening, everybody. Uh, our guest speaker is not going to be here because I guess we had bad weather in northern New Jersey, so he had lost power. And I was just telling Jim as I walked down the steps, my power blinked. So I had to bring everything back up again. So we are going to do observations. Okay, so we're going to do observations. Now, this is also going to kind of lead into the people that are getting snow, and the rest of you also. This Saturday will be a full day of investigating the signals and patterns that create the most powerful and consistent moves, and then we're going to segregate them into which ones are the best ones for somebody that's doing very short-term trading, like even day trading, very short-term swing trading, and longer-term investing. And my definition of longer-term investing is somewhere between a week and 4 weeks. And then, Jim, that's going to kind of be a prelude in one of the first weeks of December, right after the holidays. We're going to be doing, which will probably turn into be a 2-day session on options. And that 2-day session is going to include the first day where we just kind of go through the different option strategies and how they're useful. Now, there's a few of them that probably will never be used, or I never use, because they're for non-directional price moves. Whereas the major benefit of candlesticks is it gives you a much stronger indication of what your direction is going to be. So, and I think we're calling that the options ladder, which is what options are called when you look at them on your trading services. The option ladder is which strike price and which month, etc. So what we're going to be doing is going into detail on how you decipher which options are the best trade for whatever candlestick pattern you're looking at. And also going to, we'll be the December 23rd day. I think it's either the 7th or the 15th. I'll have to find out. But it will be on one of those cold, snowy days. Where you just want to be sipping on your hot toddy and learning option strategies. So today, we're going to kind of go into just some general observations that should be included in your analysis. So the first analysis we see today is the up move in the Dow. So what is our analysis of this up move in the Dow? Is this a reversal? Well, the only positive that we can apply to this analysis is that it traded positive from the 200-day moving average after it traded off and came back up. But what are the things that should still put up a red flag? Well, the first thing is we're still below the T line, number one. Number two, stochastics are heading down. And Jason, you hit the nail on the head. This is not a reversal signal. It's not a piercing signal because it didn't open below this level. It's not a bearish or bullish harami because it opened below the open. and it's not a bullish engulfing because it didn't close above yesterday's open. So the rational decision or the rational question is, well, if this is an up day, why wouldn't we consider a reversal? You have to go on the assumption. Yeah, it's not a buy signal. It's just telling you we have an up day and a downtrend. So the first assumption has to be, if this was some sort of a relevant signal, you've got to consider that the Japanese rice traders with 400 years of investigation, if this was relevant, they would have given it some sort of name and told us what signal it was. And you're not going to find it anywhere because it's just not a signal. Now, had it opened a little bit more positive, it would have been a bullish harami, but it didn't. So even though this is a power strong signal, it's not a true reversal signal. Now, does that mean it might not move the market back up? Good probability, but again, if it had been a signal, the probabilities would have been that much stronger. Now, is every non-signal telling you that it's not going to go up? No, look what we had over here. We had a bullish candle that wasn't a signal, and it did create an uptrend with a gap up through the T-line. Is that Jason belt hold? Yeah, it's nothing. Right now it's just kind of a downtrend with a bounce in it. Now, that bounce could be tomorrow they bounce it up to the T-line and back it off. So it's not anything that you would say is a true reversal. That is just barely a piercing signal in the sense that it looks like it opened at or just below the open or the low of yesterday. That's closer to a piercing signal. However, it still has two things against it. One, the T-line, they haven't breached the T-line. And two, the Cassics aren't telling you they're in the oversold area, so you still have to be a little bit leery. Tony, it's not that they don't count. It's basically telling you that the probabilities of a reversal is much, much less if there's not a signal there. Let's see, the NASDAQ. Not quite a piercing signal. They didn't open below the previous day's. No, just not a known candlestick signal. Yeah, if these were relevant signals, the Japanese rice traders would have given them a name and told us what they would do. And obviously, they don't have names, and so they don't apparently have any relevance to a reversal. Okay, so the reason that we want to be going after the patterns is that they've got a couple things that go or add to their benefit. We recommended CLP today because of the cradle pattern. Now, there's two or three relevant features to trading the patterns. One, Obviously, they're very easy to recognize. There's the headboard, there's the bed, there's the footboard. This is the cradle that's hanging down between the two trends. So you can see what the results was based upon this today's trading. It was up as a high probability trade set up after a cradle pattern. So the rhetorical question was, well, the whole market was eventually up. Wouldn't that have helped out? Now the answer to that is, look what happened. As soon as it opened, they started up. Remember, the market opened up and went down a couple hundred points today before turning around. So this one was being bought right out of the get-go. So the benefit of trading the patterns is, one, they're easily recognizable. Two, when they do confirm, the rate of return is going to be much stronger than just an uptrending stock in an uptrending market. And three, if the market all of a sudden turns against you, or everything starts getting sour or going the opposite direction as far as the general market, the patterns are going to take a little bit longer to unfold, so it gives you a little bit more time to close out positions and take profits. So the reason we recommend the pattern is because this could have a significant rate of return on the upside, much stronger than just an uptrending stock. Now, the reason we are showing people all the different type of patterns is, there's our belt hold. Notice what this stock has done over the past week when the market has been sagging. You can see what it's been doing. It's been holding the T-line and now starting back up as a J-hook pattern. So what does this tell us right here? They took out a lot of sellers. So that means there wasn't as many sellers now in front of this uptrend. We also recommended ARCO because of the J-hook type pattern, the gap up. It didn't execute today. But note what it did today. It came right back down to the T-line and bounced back up. And for those folks that are fairly new in here, the T-line is very significant. It acts like a natural support and resistance level of human nature. The fact that nobody has this on their charts makes it more relevant that it came right back to this level and bounced back up, because it wasn't something where it was backing off to a level that everybody was watching. It backed off to the natural support level of the T-line. Now, when it bounces back up, what's that pretty much tell us? That they're still supporting on this natural support level. This one can still be bought on positive trading tomorrow. Because where do you think your first likely target's going to be? Up here at the 200. If it gets to the 200, now what do? We watch to see if it goes through. If it goes through, now you've got wave 1, wave 2, wave 3 of your J-hook pattern setting up. So everything that we look at on these charts, why do I have the arrow? It tells us something. Meaning, what can we see here? We can see a fry pan bottom building up after a big hammer type signal followed by a bullish harami right smack dab on the 200. And now it's coming back up. So now what's our next thing that we want to watch? Well, if they break through the 50, now you got a nice fry pan bottom breakout. Basically, because that's where the pattern eventually started. So anything that we can identify as being a very likely spot for a breakout, like an IDT, look where our breakout level is, right about here. And it's going through. What's that tell us? It tells us that the market is going to continue to hold. It's 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 going to continue to hold. we could probably be in wave 3 from here. HMHC, this is another thing that we'll be investigating. Looks like no possession. Carlos, I don't know, maybe I'm not the presentation. Yeah, we are going to be working on, as soon as I get through all the ones that we know, looking at the J-hook pattern and the bobble breakout. The moving averages are, the red line is the 200-day simple moving average. The blue line is the 50-day simple moving average. So the reason we have those on our charts is because every major money manager has those on their charts. We have the graphics to show exactly what's happening at those levels. So a lot of people say, well, wouldn't it, Jim, Carlos, can you hear us? Apparently not. No, I forgot what I was saying. Oh. So the 200 and the 50, every major money manager has those on their charts. We're just able to see what decisions they're making when they get to those levels. And because we have the T-line on our charts, which nobody has on their charts, it makes it more relevant when they start coming back and use the T-line as support, because that's the natural support and resistance. Okay, Carlos, can you see everything now? Remember, we're not buying stochastics, we're buying the pattern. Remember what pattern or what signal this is right here. This is your best friend. This is one of the ones that we're going to be going over. So what's the result of a best friend signal? More upside. And not just more upside, but strong upside. And was this a relevant place for a best friend? Yeah, they did a best friend gap up through the 200. What did that tell us about the 200? 200 wasn't going to act as resistance anymore. So would you be buying here? Not necessarily, but you're definitely holding at this point. Let's see. TAL, we recommended. This is why you always watch. Maybe it doesn't execute on the day that you see it recommended. But look what's happened so far on TAL. A morning star signal, now followed by a bullish engulfing. What pattern can we see setting up here? There's your J-hook pattern. And once again, this is why it's always good to go back and study charts. What started this uptrend? Well, there it is, your best friend signal. Remember, the signal is more important than where you are in the stochastics. Now, obviously, you like to see a reversal signal in the oversold area. But you also like to see a combination type signal like a best friend, doji gap up, in an uptrend. Okay, and here's one that we recommended the other day, yesterday, I guess, to go short if it opened and started trading below the 50. This is why you want to know what the signals represent or what they illustrate. Notice what happened. It was a good short, but then it closed back up here as a doji. No, a best friend could be in a doji sandwich, but remember, a doji sandwich is a bullish candle, a doji, which doesn't necessarily mean it gapped up, and then another positive trading day after the doji. I'll find one here for us someplace. So if you were short and held it, what did you have to see the next day? You needed to see it open lower and trade lower. If it opened positive, you closed out the position. That's because of your doji rule, that the price is usually going to move in the direction how they open after a doji. And if you can see that doji was occurring right here at a support level that everybody else was watching, if they opened it positive, what can you make as an assessment from this? If this is probably acting as support, you don't want to be short anymore. Now, when do you want to go long on this? When they close above the T line. Where's your next likely target? You're probably going to come back up into that trend. Kind of a best friend morning star. Yeah, usually you want to see this being a large candle closing near the top end of the range. But it's kind of a morning star, best friend type signal. And I say type because usually on a best friend you want to see a strong candle next day. I meant on the last chart. I don't even remember what the last chart was. EAL. There's your best friend down here. What was I answering? This one's a morning star. Notice the doji really didn't have a big gap up, but you had a down day, a day of indecision, and the third candle closed more than halfway up this candle. Also, doji sandwich, not on this one. I'll find a doji sandwich for us somewhere. Hold on. Okay, now, just like AMRN that supported at the 50, when we recommended going short on Daku on weakness, is because we had a bearish signal, bearish engulfing, and then notice it did kind of a hammer signal. So what's the assessment on this one? Well, you're still below the T line. You're still heading down with stochastics. But you did a doji or a hammer type day. And did it do it at a relevant spot? Pretty much right in here where it's been supporting. So what's the criteria for tomorrow? You want to see it open lower and trade lower to stay short. If it opens positive, you probably want to close it out. And STX was kind of the same scenario. Notice how it failed here at the 50, but then they started buying, and today it did a left-right combo. So what's the next type of pattern that we're looking for? Well, if it comes back up through the 50, we've got a bobble breakout, which is the more defined J-hook pattern. Now, when do you cover a short? I covered the short on Electronic Arts today because the prognosis was that it probably would come down to the bottom of this trend channel. However, notice what it did today. It did a big bullish harami in the oversold area. It still has the prospects it could come down here, but right now on a short-term basis, we don't know which way it's going. If it opens positive, this may be a support here. So it just made the risk-reward not great anymore to be short on this stock. And there's going to be a lot of times where you've got the visual insights to say, all right, this doesn't look like it's having a lot of selling pressure. I'm in the oversold area, and I'm starting to see some buying that could be a signal. Yeah, why bother? There's always a good place to find a short someplace that looks like this, where you don't have any question of whether the buying is coming in or not. Let's take a look at some of the biggies that we keep an eye on. Nugget with the gold stocks. Again, not a reversal signal. So always telling us we might have a bounce, and it's got to get through this level. So it's just telling us maybe you shouldn't be short on this one, obviously. Labu, giving you an indication of what's going on in the biotechs. Again, starting to see some buying where your trajectory might be slowing down. So if they start back up, again, it has to break up through the T-line. But if it does that, it tells you that you can either be buying this or looking for the biotechs that are having the strong charts. Netflix, ever since the kind of the dark cloud gap down, today it traded positive, but your stochastics are still heading down. So you don't get ready to go full-scale bullish on this until you see it close back up above the T-line. Now, if it reverses from here and comes back up, what's our visual analysis kind of telling us? It might be a trend channel to the upside. Oh, hold on, I got a chart skewing up here. Okay. Is that a left-right combo? Here, I know. Remember, a left-right combo is a doji followed by a bullish engulfing. Now, this could be considered a left-right combo, but usually you want to see immediate weakness after the one. Yeah, that one. Yeah, that would be considered a left-right combo, but obviously it didn't follow through today. So it still implies there's weakness here, that today may just be an up day and a downtrend. Apple, that could be a bullish harami in the oversold area. So if I was short on this one, I may have covered, knowing that I'm in the oversold area, and if I'd been short, I would have probably have covered half the position at the close, waiting to see what the other half, or what it's going to do tomorrow. If you have a powerful signal like a kicker or a best friend near support or resistance, would you wait for the breakout through support and resistance, as in ED today? No. Remember, these are just indicators or confirming indicators. This is a bearish kicker signal. The number one criteria for analyzing your price movement is what is the signal. Then you apply everything else to it that would help confirm it. So I'd still be going short on this one tomorrow. I've got a few shorts here that we'll get to. Did we do NVIDIA? Jason lost $30 per share in after-hours trading. Ooh, I didn't know that. Let me take a gander here. You're right. It's trading right now at 168, closed at 202. That's going to probably pull some stocks down. Kicker can be in either direction. What did we just do, Con Ed? A kicker is, you can see they opened here and closed here, green candle. The next day they opened at or below the previous open and went the opposite direction, which tells you the investor sentiment has been really powerfully kicked in that direction. I'm thinking of a triple bottom. Which one were you looking at on that one, Don? And Amazon, even though it came back up, it didn't close above the halfway point of this candle. Stochastics are still heading down. This just tells me there's probably a likely a an up day and a downtrend. So again, when you see something but it's not a signal, you don't give it as much credence as if it were a reversal signal. And Tesla, you can see on the down day, the next day they did a bullish harami telling you the selling had stopped. Now this is kind of a doji sandwich, somebody was asking before. Bullish day, then a doji, then a bullish day. And notice the magnitude of this candle right here. About the same as this right here, with the doji sandwiched in between. That gives you a very strong probability that when you see a doji sandwich, usually it's going to head up higher. And AMD I've got on the big list now. There's your bullish harami, gap up, J-hook pattern. First target is probably right here, which would kind of coincide with filling this gap, which makes the second target up here likely. Oh, an Ed, triple bottom down here. Yeah, but you can't remember, this was past investor sentiment. Now you've got a strong kicker signal. Now what you do is if it comes down here, you just watch to see what happens at this level. And that's, again, the benefit we have, that once you get down here, if you have bullish haramis, that's telling you the selling has stopped. Okay, so the thing that was being picked up pretty much in the chat room this morning was there's a lot of J-hook patterns setting up. V-E or V-I-R-T. See, this is kind of the classic fry pan bottom J-hook. And notice the relevancy of this J-hook. They could never close it below the T-line. So there's one very simple statistic. The probabilities, as long as you're above the T-line, is that you're still in an uptrend. The probabilities, as soon as you close below the T-line, you're probably now going in the opposite direction. LNTH. There's your kind of your Morningstar signal right here on the T-line. This is what we call a bobble breakout. The difference between a J-hook pattern and a bobble breakout is that it is a J-hook pattern that has a much more defined area where they sold and an area where they supported and bought again. So if I saw this hanging man, and what do we know about the hanging man? If it trades lower the next day, you close out the position. Then we can see that it's supported on the T-line. Where do we start buying? When it comes back up through the resistance level, because we know that's going to be a J-hook pattern breakout. So the reason I'm showing a lot of J-hook patterns is they have high probability results, making it just something that if you just, the whole point of showing the different patterns is instead of trying to learn all 15 or 16 of them, you learn 3 or 4, and you learn them very well. You know exactly when to get in, when to get out. You become an expert at it, so you don't have to worry about anybody else's analysis of what the market is doing, what the a specific stock is doing. If you recognize that pattern and know exactly what it should do, when to get in, when to get out, and when to stay in, now you're not at anybody else's mercy as far as making your decisions. Is this a left-right combo? That was a bearish left-right combo yesterday. But usually you want to see a left-right combo. You know, it's still considered a left-right combo. So you still have to wait to see if this opens higher tomorrow. Obviously now what you have is a trend channel, and they're probably bringing it back up. So if you were short, it has to open lower and trade lower tomorrow. Now, the left-right combo is like right here. If I see a downtrend, I'm in the oversold area and I see a left-right combo, and let's say I happen to have been short, I close it immediately. Because the strength of a left-right combo would eat that type of move. So the probabilities that if you're seeing it occur in the right condition is definitely want to be out of that trade, because the consequences of a left-right combo is that it's got a very strong price move about ready to occur. And it might be on the gap up the next day. Another J-hook pattern. Notice your morning star signal, gap up. Now you have a little inverted hammer, gravestone doji, and notice what it couldn't do. They couldn't close it below the T line. Where do you think your next target is? Up here. Now, you've got a J-hook pattern. If this is wave 1, the magnitude of wave 3 should be up at least up to here. So what's that tell you about this kind of resistance level right in here? If they open this positive, that resistance level is not there anymore. Oops, how do I get rid of this? Well, for crying out. I want that. There. So this becomes a very easy, high probability trade assessment. I can see the J-hook pattern. I can see it's right here at the resistance level. And I know if it opens positive, it's breaking out of my J-hook pattern and telling me this resistance level is not acting as resistance. Is that J-hook on HBM similar to a pennant? No. No, not really. A pennant you can see it much more clearly. This is, again, that little slow curve J-hook type pattern. Did I not mention anything on LHIPO? But again, if this one starts trading positive, you've got a J-hook pattern to the upside. EXEL, kind of a doji sandwich, breakout through the 50. So if they came up through the 50, use the 50 area as support, where do you think the next target is? The 200. I got a bunch of them here. So the reason I'm showing all of these is there's a nice J-hook pattern. There's your morning star type signal right off the T-line. Wave 1, wave 2, wave 3. The reason I'm illustrating these is if you decide to really concentrate on 3 or 4 signals or patterns, there's kind of your J-hook pattern. I'd still be buying this one on positive trading. Notice how this one started with your doji, kind of wedge, breakout, gap up. Now you've got the breakout through the moving averages. Should be more upside. So anytime you see this doji gap up, that was our reason for recommending MNK last couple weeks ago. Doji gap up. And notice what it hasn't been able to do. Hasn't been able to close below the T line. So again, the reason we look for the patterns is because we can analyze if they're still working and knowing what the result should be. A much stronger price move than just a normal slow uptrending stock position. Bullish engulfing right on the T line on send. J-hook pattern setup. Bigalow. Bullish engulfing right on the T line. You could be a buyer on positive trading because that would be breaking this little downtrend and making your J-hook pattern confirmed. Beastie, kind of the same scenario. Get rid of that line. Not, let's see. Got kind of a J-hook pattern. But obviously, if it breaks out through this level, after supporting right here at the 50, where is your upside potential? Could be all the way up to the 200-day moving average. Oh, I guess I was doing this because of the bobble breakout. Failed up here at the 50, and then came back up through the 50. And Venda, another J-hook pattern setup. Now again, the more refined J-hook pattern is your bobble pattern. Somebody pointed out on CSX today. Look what happened right smack dab on the 50, a bearish Harami doji. It's told you that if it opened lower the next day, you close the position. And then look what happened. It came back up through after supporting on the T-line. You can be a buyer of this one. Now, it's not a very exciting stock because it's, a railroad, but definitely puts you in situations where an option trade is going to be very high probability. SYMC, failed at the 50, pulled back, bobble breakout. What do we expect from here? Wave 1, wave 3. I'm going to put a little star next to that one. So one of the major benefits that I've found through the years is when I see something like this and I can put on an option trade, at least I know when I put on the option trade and figured out which one was the best one as far as the risk-reward and the math, that the probabilities are greatly in my favor that I'm going to make some money with that trade. Sometimes they're big, huge moves. But every time I put on a trade, I know the probabilities are in my favor, and I know exactly what to do, when to get in. Here's another VIPS bobble breakout with a little doji gap up. If this trades up above today's open, that tells me the bulls are still in this. I got a wave 1, wave 2, wave 3 probably coming back up to test this level. All right, what else we got? Kicker signals. All right, when do you buy a kicker signal? And how do you find a kicker signal? This is also what we're going to be going into over the weekend. Usually a kicker signal is if you do, let's say, refresh your scans somewhere, let's say after 10, 15, 20 minutes after the market opens, you see something like this. You can identify that it's a kicker signal. You want to be buying. Now, what everybody says, well, I hate chasing a stock. Do I want to be buying here? Do I want to be buying here? Do I want to be buying here? Very simple process. You flip to your 10-minute chart. Oops, that's the 5 chart. That's where it gapped up. I might be buying here. I might be buying here. Buying here. Nope, I wouldn't be buying here. I don't know how far they're going to pull it back. Well, they pulled it back to the T-line. I can be buying here. I can be buying here. Might not be buying here. But as soon as I see that they're supporting of the T-line, I can be buying here. Now, up here, that looks soggy. That looks soggy on the 10-minute chart. What's it telling you is happening on your daily chart? You're still closing up at the very top end of that trading range. Now, with a big move like that, if you've been to our statistical training, we know what the probabilities are. If it opens positive, I want to see it start trading positive. If it opens positive, put a stop right here at the previous day's close. As logic says, if they open a positive and come back down through there, there's profit taking. How far is that profit taking going to go? It might go to here, 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 here. We don't know. Close it out, and then what's the logical thing to do? So if they bring it down here, and then turn it around and bring it back up through this level, you can always buy back, because that pretty much tells you the profit taking's over. On the other hand, if it opens here, you close it out immediately, because that means profit taking has started. What's the worst case scenario? It opens right here and comes back up through this level. You can buy it right back again. By open positive, do you mean give it 30 minutes after the market opens or another time? No, if this opened here on the open, I'd close it out. And no time frame. If this opens positive, I want to see it trading positive. If it opens here and after 4 minutes it's back through here, I'm closing it out. Okay, SP, yeah, hold on, I'll find one that has the different waves to it. Berry, kicker signal. Now here's your wave 1, wave 2, wave 3. Wave 1. Now you can see there's kind of a consolidation. That's wave 2. Now they have a kicker signal. That's probably producing wave 3, which wave 3 is usually the same magnitude as wave 1. Now that has nothing to do with Elliott wave. The only thing that Elliott wave did for us, oh boy, hold on for 1 second. I've got technical issues here. I'll be right there. Don't go away. Okay, sorry about that. I didn't know whether the lights are starting to blink again. Yeah, technically the cat is at it again. Yes, as Jay is describing, prices do not go straight up. Prices do not go straight down. They go down, then there's profit taking, either on the long side or the short side. That's just human nature. So things move in waves. Wave 1, wave 2, wave 3. And I'll show some more here as we go along. Here's a kicker signal. Apparently something happened in natural gas prices today. Now, look what was happening in natural gas prices. This goes back to the very basis of candlestick analysis by the Japanese race traders, which is, where do most people buy? They buy exuberantly at the top. So whenever you see a gap up in the overbought condition on anything, get ready to take profits. Oh, natural gas was a build. Yeah, the same thing occurred in crude oil, but that didn't seem, apparently that might be why the prices have been going down for a while with the anticipation of the build. We did the kicker. Oh, flutter kicker signal. This one is even easier to get into than a kicker signal. Remember on this one, we have to decide, do we get in here? Do we get in here? Do we get in here? We know it's a kicker signal, and where do we get our money to get in, or how much money do we put in? Whereas a flutter kicker signal is a much easier culprit to control. Look where this opened and closed here. Okay, they gapped up and did a doji. On the natural gas, yes. Because if you were long natural gas and it gapped up here in the overbought condition, what was the first thing you should have been alerted to? Get ready to take profits. If you saw it gap down below the previous day's open in the overbought condition, that far away from the T-line, remember the caveat. I didn't mention the caveat to our T-line. The T-line is very simple. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. With the caveat that the further away you move from the T-line, the higher the probabilities it's going to come back and test it. So if you're that far away from the T-line, gapping up in the overbought condition, you get ready to take profits on the first signs of a firm selling. In this case, when they gap it down below the previous day's open, there's only one thing you want to do. Hit the sell button as fast as possible. And we'll be going into that a little bit heavier over the weekend of what to do when. This is a bullish flutter kicker signal. Now, on the last one, how come I can't remember what the last one was? VYGR. Very simple for a flutter kicker. If it opens positive, starts trading positive, buy immediately. Because a bullish flutter kicker is essentially a kicker signal. Look what happened. It opens here, closes here. They gap up into a doji. And the mechanics of a flutter kicker signal is so simple. It's just like a doji sandwich. The price is going to move in the direction how they open after a doji, which means if they're trading positive, look out this little flutter, you've got a strong kicker signal. Yeah, Ray, I think they reported a big build of natural gas. But that might change pretty quick with the cold weather hitting. When I walk past the sliding glass doors here, I guess we've got enough snow out there to turn everything white. Okay, so here's a few to look at. When you see that kicker type signal, doji, remember, yes, a kicker signal is very easy to identify. The first thing you see is a doji gap up above the previous day's open. So now you're ready because you know the doji rule. That if it opens positive, you can be buying immediately because the probabilities are pretty strong it's going to trade positive. Now with that, all you have to do is take out that little flutter and you essentially have kicker signal. So what did I just do? So you look at something like this, you've got a gap up doji. If this opens positive, what's all our elements? It's going to move positive after a doji, and if it moves positive and you took out the flutter, you basically have a kicker signal, which is a strong indication there's going to be more upside. So anytime you see that gap up, look for positive trading after that, because that's usually a very forceful indication when they gap up. Let's see, ARNA. Gap up doji. If they open this positive tomorrow, you can be buying it. Now, again, this is why we're showing all these different trading strategies so that you can learn a few specific ones and learn it very well, knowing exactly what should happen. Like this, kind of a fry pan bottom J-hook or a cup and handle. Notice it did a little inverted hammer type signal yesterday. And if it opened positive tomorrow, what relevancy would that have? I would basically tell you they've gone through this resistance level with a kind of a J-hook pattern. There's probably more upside. What's your upside? Probably the trajectory of what the existing trend was. So these are all little tidbits that once you understand them and learn them, now you know exactly when to buy and what your target is. Now I picked this one out because this is a piercing signal. It opened below the previous day's trading and closed more than halfway up this candle. Now you've got kind of a double doji set up, which also is giving you kind of a little scoop pattern. Where do you think your first targets are? Probably up here at the moving averages. Now, so what's your game plan? Well, if you buy on positive trading, it's telling you it's breaking out through this downtrending channel, telling you that this is likely your target, and where do you not want to see this close? want to see it close back below the T line because that tells you they didn't break out. Celica, there's your little scoop pattern with a morning star signal. Where do you think your first likely target is? Does a doji candle have to be a certain length? No, all it's really doing is showing you there's indecision between the bulls and the bears, and the body is very small relative to the total trading range. So remember, a doji or a spinning top just tells you there's indecision between the bulls and the bears. So here's one. Smaller. Dang. What does this tell us? Well, you got a J-hook pattern. Is it relevant at this point? Kind of broke out through here. So this wave 3 is probably in progress. Now, whenever you see an industry, the weed stocks, bullish engulfing signal on ABC. I don't know why that chart's not bigger. CGC. I thought it was a bullish engulfing over on the other charts, but kind of double bottom. Crone setting up nicely, and PLRY also looks like it's trying to set up with a little bullish signal. Now, the reason I bring that up is if you see an industry where everything's starting to trade positive, that obviously means a lot of people are buying stocks in that sector. It's not just one stock, it's a whole sector. So now you've got the ability to go back and see which ones of those stocks are acting the best in that sector. So you've already got the alert that that sector is being bought. Now you just go and see which ones are the best buys in that sector. LCI, kind of a big fry pan bottom, and right now you can see that after it broke out of this fry pan bottom, it's supporting at the T line. It still makes for a very good buy setup. That's a good looking chart. Even though your stochastics are up here, the difference between a pattern breakout and a signal indication is you're looking for the signals to occur in the oversold area. Usually you're going to find a pattern breakout when the stochastics are already up in the overbought area. MJ, that's the ETF. Yeah, so the ETF is showing some strength. So just like analyzing something like Labu, but if Labu is acting strong, that means you want to take a look at the biotech stocks. Kind of a little left-right combo, yes. So you've got a doji bullish engulfing. Now, what's that usually imply? Indecision, 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 indecision. Oops, now they've made a decision after that indecision. That left-right combo is a good indication that which way they've made their decision coming out of that indecisive stage. WABA, the bigger the signal, the more compelling there's been a change of investor sentiment. Big, huge, left-right combo, and where did this occur? Right at the same level it bottomed out before. This one becomes a very viable trade setup. All right, on the short side, usually show this one. Whenever you see a situation where you see a sell signal, now this is why you want to know exactly what should happen in each one of your price moves. There's a fry pan bottom. How long do you hold a fry pan bottom trend? You see a sell signal and a close below the T line. Now, when it closes below the T line, remember what I said about when it closes above the T line, the probabilities are in your favor that it's going to be an uptrend. much higher degree of probability. Do you see a sell signal? Same scenario when it closes below the T line. Want to get out, you can always buy back, but the probabilities once it closes below the T line can put you in a situation like this. That's exactly why our training this weekend is to get people to narrow down their analysis on chart patterns that work for the time frame that they trade in, whether it's day trading, very short-term swing trading, or longer-term swing trading. And I say swing trading because I hate to think of long-term investing being any more than 30 days out. But what you can do at that point is, instead of trying to learn all of them, you always want to be familiar with all of them, but you learn 3 or 4 very well. And showing the number of J-hook patterns that were occurring today, I can pretty much guarantee you that no matter when you're trading, if you've only got 3 or 4 patterns that you're trading, you're always going to have more trades than you can handle, which puts you in a position where you can cultivate those positions that you do find to see which ones are going to be the best ones. Okay, so this is why if you close below the T line, close out the position. If you move too far away from the T line, remember, the further away you move from the T line, the higher the probability it's going to come back and test it. So I was this far away from the T line and I'd been short by some lucky stroke of luck, I would have probably at least closed out half the position. I know after hours it's trading back up in this range, which means if I closed half here and it gaps up and opens here, I close the other half, at least my average exit was falling like wildfire. What are your favorite ones? SP, if I just traded the best friend, the kicker, and probably the fry pan bottom breakouts, I'd have more trades than I'd ever be able to handle. DDS. Look at your bearish engulfing signal right here at the 50. Whenever you see this type of thing, where they try to take it back up, if I was going to go short, may not have shorted on this day, and then I wouldn't have shorted on this day because I saw it trading positive, except when it came back down through the open, what did it tell me? They tried to take it up one more time and failed. That becomes a very high probability entry point to go short. Now, does every short get a situation like this? Definitely not. But when you're shorting on the charts, it puts you in situations where the probabilities are much greater that you're going to be in the right position. So if I see something like this, where they took it up and then came back and did a bearish engulfing signal, that also tells me that there was a lot of force. That's kind of a bearish booster engulfing. That tells me I want to definitely be looking to go short on weakness tomorrow. Defrog. See how you got a slow curve, a doji gap down. Where's your next target? Could be at the bottom of this. So being able to visually recognize what's happening, especially in a sector. Notice there's your left-right combo, gap down the next day. That tells me we're probably heading back down into this direction. And I think SWN is another housing stock. No, it's an energy stock. There's your left-right combo after a shooting star. That tells you they're probably heading back down to the bottom of the channel. Oh, Lennar was the other builder. This time they used the 34 as a resistance level. Now notice what you have, a little bearish best friend signal taking you down. All right, so back to somebody's question. Prav, as you say, lots of good-looking stocks, but if you narrow down your own analysis to 3 or 4, now you become very detailed as far as knowing exactly when to get in and when to get out and what to expect from those signals and patterns. You don't have to be guessing. Once you learn 3 or 4 very well, now you can start spreading out a little bit. Other ones. Okay, that's about all I got. Now, I want to remind everybody that the weekend, this on Saturday, is to identify which 3 or 4 trading strategies you might like the best for your own trading. And once you got those pretty well set, a couple weekends after that, we're going to be going into which trading option strategies work the best. Which ones, I mean, there's probably 4 or 5 different option strategies you can use for a fry pan bottom breakout, depending on your risk-reward factor. And it could be just buying calls outright for the next 3 weeks. Or it could be buying some close-in spreads, meaning only a week away or 2 weeks away. Or another spread 3 weeks away, much higher, where you're only paying 40 cents for a spread, that if it moves up to that level, that 40 cents turns into $5. My moving averages are, the blue is the 50, the red, which is not on here. Red is the 200-day simple moving average. The gray is the 34 exponential moving average, which works reasonably well. But then the black line is the T-line. That's the most important one for trading candlesticks. As you can see, the charts are very plain. There's not a whole lot on here because the most relevant factors are what are the signals, where are we with stochastics, and the T-line. Everything else is just added, meaning everything else. The 50 and the 200 is just logical places to watch and see what everybody else is doing. Okay, Bert. Okay, any general questions on candlesticks? Oh, I've kept this all over time anyways. All right, with that, let's everybody do just one request at a time. Jim, go ahead and do the double I. I've been using Steve's teaching for the past 8 years, and I have never had a losing year. All right, good. All right, thanks. I always like Dean Foods. Right now, I wouldn't be long or short. But I always like Dean Foods because a few years back when we were doing the private training up at Cuca Lake, we had bought Dean Foods a few weeks earlier at 8, and I think it went to, I want to say 17 over like a 3 or 4 week period. And we took profits because it closed below the T-line. Didn't have enough sense to go short because over the next 2 weeks it fell all the way back to 8. And then it did a buy signal. So we were sitting there at the private trading up at Cuca Lake, and I said, all right, you can start buying this again. And so I bought some, and obviously everybody's sitting there watching, so the ones that had their laptops with them, they bought. And I think the next morning they announced earnings that I didn't expect, and they went right back up to 17. Everybody paid for their training on that one trade. Not that that's how we promote the training, but again, the probabilities of being in the right place at the right time is just dramatically improved based upon seeing what the charts are telling you. Labu, not a reversal, but it's telling you there's probably some strength starting to come in. So you can start watching the biotech. Cypress, that's a nice little pattern, kind of a J-hook. You can buy this one, just obviously watch to see what happens once you get to the 50-day moving average. Boeing, nothing yet. Your bearish engulfing. Your stochastics heading down. Now, if they open this positive tomorrow and I was short, I'd probably consider covering short positions. If it opens lower, there's your bearish doji sandwich telling you you're probably at least heading down to test the recent low. And Oracle, that's a toughie chart to trade. Now, that is a kicker type signal, except the true kicker does not have this tail to it. It should open and immediately trade positive. However, it's still got the same implications as a kicker signal, so you don't disregard it. It's still a kicker signal, but just a weaker kicker signal. But notice what it did. It came right back to the 50 and came right back up again, doing a J-hook type pattern. So you can still buy this one. SRPT, bullish engulfing right here on the 50. If I was short, I would have covered the short today. Wouldn't be going long, though, until they get it back up above the T-line. Martin Marietta, J-hook pattern. That's a good-looking chart. That should be heading up toward the 200-day moving average. Just use the T-line as your stop. CVS, notice what it couldn't do today. They couldn't close it below the T-line. So, makes it very simple. It's kind of a spinning top hammer type signal. If it opens lower, you're long, got a bearish left-right combo, and now the potential of a bearish doji sandwich to close out the position. If it opens positive, you stay long because you got kind of a J-hook pattern. GNRC, left-right combo right here at the bobble breakout. You can buy this one. That's a good-looking chart. AVEO, you've got the big hammer signal. I wouldn't be going long until they can get it back up above the T-line. Again, above the T-line gives you that dramatic probabilities improvement. Oh, Christmas corn. Let's see. CEZ8. Corn just sideways. Just absolutely sideways. Now, I think I can do this one. Feeder cattle. Maybe I just do that. Feeder cattle, I'm looking at buying those. The January's tomorrow. Why? What type of pattern has it set up here today? Here's your McMuffin. Morningstar signal, doji sandwich. What's the next likely target? It's probably back up to the 50. EB, is that a symbol? Chubb, another one you can be ready to buy if it comes up through the 50. Okay, yeah, Christmas corn, because it's looking Christmassy outside my door right now. Now I can throw the cat out into the snow. ARNC, left-right combo. If you're buying this one, you still have to break through this suggestion here at the 200. XRT, get ready to short this one on weakness tomorrow. This one's a very simple one. If they open this one lower, this is your retail ETFs. Yeah, the retailers getting hit pretty bad. There's Macy's. After the left-right combo, Now, it opened positive. So what makes for a very easy entry is it opened positive, but as soon as it came back down through this level, you could short it because that would tell you, because this red candle was starting to form, that the bears were in control. EGAS. All right, this one you get ready to, this is the inverse natural gas. This one you get ready to cover because remember, when they gap it down in the oversold area, and notice what they did, kind of an inverted hammer. Today, if I had been short this, I would have definitely, with a positive open after an inverted hammer, the oversold area after gap down, I would have been covering. Oh, I haven't even gone up to the box to put the corn out this year. I am afraid that corn's probably pretty moldy by now. But we didn't do a whole lot with the corn because western Pennsylvania is probably one of the most prolific areas for Lyme disease. So we've been trying to keep the deer away from the house. Usually on winter nights, because we've got the spotlights up there, there'll be two groups of 8 deer up there, and they'll get up on their hind feet and paw at each other. That's a carve. That's not a chart to be in. AB. That's just you come up with some of the lethargic charts. XL. This one you can be buying on positive trading. J-hook pattern off the 50. Passy. Yeah, if you like it, you can be buying it. Nothing great yet. Yeah, Bambi Burgers. And NVIDIA. Oh, NVIDIA's trading way down here after hours, right? That's why you don't go long until you see a close above the T-line. Okay. With that, everybody have a good snowy evening. I was going to order firewood today, and I didn't get to it. Yeah, I would suspect there's going to be some sympathy on, with AMD. Brings that one back down below the T-line probably. Arizona, 75 degrees. That's cold for Arizona. And Micron. Yep. So this is where I'm not buying until it closes above the T-line, so it would have had to open positive tomorrow before getting in. Wow. Okay. Yeah, a lot of smoke up there, and market didn't like earnings. That's right. Southern Company. You stay long, but you did the hanging man, which means if you want to see this open positive and trade positive. If it opens lower and starts trading lower, you probably want to take some profit. SCG, that one you can stay long. That's a nice slow curve breakout. XRT. Oh, that's the retailers. If this opens lower tomorrow, you can short it. One more, and then we go romp in the snow. EXPE. This is a kind of a good lesson that if you start seeing dark candles and they start closing back below the T-line, you're in a downtrend until you see a buy signal. If you're short, you stay short on that one, Ralph. Okay, everybody, we will see you bright and early in the chat rooms tomorrow. We'll see you then.